Hey everyone, welcome back to Corporate Decoder. Today, International Media Acquisition Corp, IMAQ, just filed an 8K about extending their business combination deadline, and I am seeing a really common SPAC pattern unfolding. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is buying more time to find a business to merge with, and it reminds me of many SPACs that have struggled to execute their deals. So what exactly is happening here? International Media Acquisition Corp, or IMAQ, is what we call a special purpose acquisition company, or SPAC. Think of it as a shell company that goes public with the sole purpose of raising money to buy or merge with an existing company. They have a deadline to do this, usually about 2 years. The 26th of June 2026, that deadline was approaching fast, the 2nd of July to be exact. But they've just announced an extension. They are pushing their deadline back by 1 month, from the 2nd of July 2026 to the 2nd of August 2026. They did this by depositing $2,000 into their trust account. This is a small amount, but it is the trigger to get that extra time. This practice of extending deadlines is very common for SPACs, especially when they are having trouble finding a suitable merger target or getting a deal approved. You see, when a SPAC goes public, it sells units that often include common stock and warrants. Those warrants give the holders the right to buy more stock later at a set price. To get an extension, the SPAC usually needs the approval of its shareholders, and often the SPAC sponsors or larger investors will agree to buy additional warrants or even stock to fund the extension. In this case, it seems the sponsors are ponying up the cash to get more time. Looking at their filings, International Media Acquisition Corp has common stock, warrants, rights, and units trading under symbols IMAC, IMAQW, IMAQ, and IMAQ respectively. These are all related to the SPAC structure. The company is also highlighting that it is an emerging growth company. This status gives them certain regulatory flexibilities, like being able to delay adopting new accounting standards. It is common for SPACs to fall into this category. Now, why is this extension I'm seeing such a big deal? It really points to a common SPAC struggle. Many SPACs raised money when the market was hot for them, but then they found themselves with a lot of cash and fewer good companies to acquire. Finding the right business at the right valuation is tough, and time is not always on their side. Think about it this way. Imagine you are a SPAC sponsor, you've raised a pile of money, and you have a ticking clock. If you rush into a bad deal just to meet the deadline, you are going to disappoint your investors. It is better to pay a small fee for an extension and keep looking for a quality target. This has been a theme across the SPAC market for the last couple of years. Many SPACs that went public in 2020 and 2021 are now facing similar deadline pressures. As for International Media Acquisition Corp, specifically, it'll be interesting to see what they announce next. Their last reported news mentioned a potential deal with VCI and an equity line, which suggests they are actively pursuing a merger. One of the exhibits here is listed as an extension letter. This is the official document detailing the extension. While we don't have the full content of that letter here, the 8K filing confirms the extension itself. The filing is signed by Yufang Chu, who serves as both Chief Executive Officer and Chief Financial Officer. This dual role is not uncommon in smaller companies or SPACs, where a few individuals wear many hats. So, what is the takeaway here? This extension for IMAQ is a standard move in the SPAC world. It is a signal that the company is still working to find a merger target and hasn't given up. It buys them breathing room, but it also means the market will be watching closely for any news on a potential deal. The risk for investors is that if a deal isn't announced soon, the SPAC could eventually be liquidated, returning the trust account funds to shareholders, minus some fees. This pattern is very similar to what we saw with other SPACs during the market downturns. Many of those that couldn't find a deal experienced significant drops in their stock price once their deadline passed without a merger. For example, in 2022 and 2023, many SPACs that extended their deadlines multiple times eventually liquidated, and those that did merge often saw their stock price fall significantly post-merger. What I'm actually looking for is concrete progress on a merger announcement. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, like and subscribe and join our Discord for more.